Now, I don't think it should come as any surprise that the markets are doing something completely different to what the news is saying and what the polls are showing from investors. But nonetheless, let's take a look at where these points are showing up and then how we can use this hopefully to our advantage with investing in whatever it is you like. Bitcoin, cryptocurrencies, the stock market. But of course, there are always going to be nuances within those markets as well, as I'll show you in today's video. I've got GameStop coming up after it dumped 29%. And a quick look at Tesla before we get into Bitcoin. Okay, so significant, very, very significant lows here for the S&P 500 that the investor sentiment got absolutely wrong. Conference Board Consumer Confidence Business, worst 6 months ahead. So this is the sort of stuff that is coming to the headlines at the moment as the S&P 500 gets rejected on a short-term basis here at the 50% level. I'll get to that in just a sec. But essentially just looking at the broad perspective, the macro look here, what's happening with consumer perception of the economy? 27% of Americans expect business conditions to worsen over the next 6 months. Essentially, these have been some of the best times, not 100% hit rates like it was back in 2001. There was still further to go there. But of course, we saw and heard the same thing in 2022. And that was around this peak here. So we're looking at the orange on the chart. When this thing spikes, that is when you get the worsening conditions or the expectations that business is going to worsen. And of course, I think if everything else is going down, the economy, the stock market, the consumer confidence, especially within business, well, you can't really expect Bitcoin and cryptos to go up. And I suspect that's what the majority of you are here wanting to learn about. And so we've got the next, this is the highest share since Q2 of 2022, and that was the June bottom for the S&P 500. So the result of this poll is that 67% of Americans perceive the likelihood of a recession over the next 12 months as somewhat likely to very likely. Confidence has been shot, and of course we could probably put that down to Trump and his ongoing war on tariffs and everyone else that is in the global economy. Where we sit, short term, let's draw it back down to the short term. Clear rejection within less than a point from the 50% level, so 5,838. That's basically been the level that we're watching here to get some sort of strength over the line for the S&P 500. We've seen our 3 bars down, lower highs, lower lows, and we've also seen it on the daily chart as well. So this was the signal at the high here. 1, 2, 3. When you see that from a significant turning point, it generally suggests that there's going to be much further downside, or at least the time it takes to overcome the lack of confidence that is building in the market. Remember, it wasn't completely there yet because you had the election here, markets went up, and people, I guess investors didn't expect it to be that weak come March, but there it is. The signal came up right at the peak to let you know. So we've got the 3 days down, the 3 weeks down, whoops, showing up 4 fingers, 3 weeks down, and now we've seen a rejection here at 50%. So the sentiment is down and the price chart is getting rejected at this point underneath the previous support levels, 58.38. And now what everyone's waiting for is the strength and weakness. Does it fall further than the low here, or does it continue to consolidate over April and May, basically going into Q2? My view, of course, is that this is going to grind out through Q2, and then we'll start to put in some higher lows, if not sooner. But I am looking at somewhere out towards June as a low. Even if this does start to rally, I'd still expect some sort of pullback just because of the severity of the drop and how long it's taken from this point. So while this is going on, it doesn't seem like Bitcoin is going to magically jump to a new all-time high. I've got that coming up in a sec, but let's cover off the macro before we get into Bitcoin. Of course, the 18-year cycle, the winner's curse phase are in the top here, lasting roughly 2 years. So we still have more time left on the 14 years up into the 4 years down. And I think that'll become a little bit clearer for the second half of 2025. You'll see investors potentially getting a little bit too excited for their portfolios and also into 2026. But I think if that comes around, just be prepared. Maybe look to take some profits at that stage, but of course we still have a little while off. Now in terms of cycles overall, this one here is your 18 to 20 year cycle. On top of this, we have the Kondraty-Ev wave. So Kondratiev, you can see the name up here. The Kondratiev cycle also playing out. Commodities running into peaks at the moment. Now this one's great for some of the tinfoil hat guys, but there is also a lot of research and analysis that goes back to the 1700s. The reason I say for the tinfoil hat guys is because Kondratiev was a Russian economist in the 1900s, early 1900s into the 1920s. He was executed in the 1930s because the Russians did not like what he had to say about the cycles. He suggested that the US economy and the US markets were going to do very, very well in the 1900s based off of commodity prices. They didn't like that, put him in jail, and then later killed him. So that one there is for your tinfoil hat guys because, well, if you've got a country like Russia trying to kill someone for their information, there's probably a little bit more to it. Leaving that aside, we have the Kondratiev cycle, basically commodity cycles heading up into a peak along with the real estate and the economy prices heading up into a peak. So this is the big term stuff. And something we'll come back to in future videos is the rate cycle as well. Now this has started to head up over the last couple of years. Obviously everyone's aware that interest rates have gone up. I think there are still a lot of people that believe their interest rates are going to come down a lot further and maybe head back to zero at some point. This one as well goes back to 1790, not 1890, not 1990, 1790. And the cycles have played out almost to a T. Now that doesn't mean that it goes from zero up to 14% back to zero, 14% interest rates back down to 0%. It is just looking at a cycle of that 60 years of the market going up or the interest rates going up and back down within that 60-year period. And so it seems like we're going to see higher interest rates until 2040. So this could also be a dampener towards the end of the cycle as well. It takes a bit of time for this to come into the psyche of the investors and the population, so on and so forth. But I'll come back to this in future videos. The discrepancy, the thing that we're missing here from the consumer confidence and how low everything is heading up. Like it's just a pure fact of the markets. And of course people go, well, the cost of living is going up and those prices are going up. But you know, we're talking here about investing and asset prices going up. Well, we're seeing now silver 35, 43.5, so 1 cent off a 12.5 year high. Along with that, other commodity prices that have already done new all-time highs. Gold, as I start filming this, has absolutely gapped up, huge gap up here, 1% to $3,105. Yesterday, the closing price was $3,069. We've also seen copper in the last 2 days hit a new all-time high, $5.37 after pulling back there. But essentially, these commodities are continuing to hit new all-time highs. I bring that up because of the Kondratiev wave. You're seeing commodity prices increase, and this is part of this stage of the cycle as well. And this time's 20-year cycle, so our 18-year cycle, prices continuing up. So there is still a lot of strength in the commodities, hitting new fresh all-time highs. We recently saw that with the softs as well. You had cocoa, so essentially your chocolate, hitting new all-time highs. Coffee did the same thing, hitting new all-time highs. Orange juice hitting new all-time highs. I'm telling you this because this is what we see at the end of the Kondratiev wave cycle, and it so happens, well, the end of the peak, and it so happens that this one is also lining up with the 20-year cycle. Remember, the 20-year cycle is 14 up, 4 down, and the Kondratiev cycle is roughly 20 to 25 years up. Same sort of thing to the downside. Putting all of these cycles together along with the trend-based system is our specialty at TIA Premium. We have a sale going on today for the next 24 hours. So if you've ever been on the fence about joining TIA Premium, now is the time to do it. Link is in the top of the video description. You'll get access to all of the courses going through the Gann Swing Indicator, the Wyckoff course, the Elliott Wave course, plus a ton of masterclasses that help put together the less sexy parts of a plan, but actually the most important, like your risk assessment and your money management. The link is in the top of the video description. There's also the TIA Indicator Suite. This is the thing that we use for all of our trading and investment decisions. As I've talked about, we look at the cycles, the decennial cycles, and then how this all plays together with the stock market and, of course, BTC. Now, quick look at the NASDAQ before we get into some of the tech stocks which are related to BTC at this point. Okay, so the NASDAQ is looking slightly weaker than the S&P 500. It put in a lower high while the S&P was putting in a higher high here in February, and the latest rally has just fallen short of the 50%, whereas with the S&P 500, we saw it come all the way up to the 50% at 5,840. Okay, so the pullback is still okay, high highs, higher lows, but if we're to see a rejection here and the trends begin to turn down, well, then I'd expect these, well, at least in the case of the NASDAQ, some of the tech stocks, to potentially be hit a little harder than the S&P 500. Now, speaking of tech stocks, we have Michael Saylor and GameStop. This time GameStop is looking to raise $1.3 billion for their own Bitcoin reserve. Bumbling around on X. I don't know why. There's obviously some sort of meme related to this. Nonetheless, GameStop give up gains. Absolutely crushed today. 2 days, 29% from top to bottom. After crypto buzz, is the Bitcoin bet losing its shine? So a little further down, 1.3 billion 5-year convertible bond. So trying to do something similar to what Michael Saylor has done, and that is with their GameStop shares. Buy the rumor, sell the news, 29% down. And it's a good lesson here of amateurs controlling the open, professionals controlling the close. It's an old trading saying, maybe you've heard it before, but essentially everyone getting hyped up on the news, and there is your open, there is the close, open, close, and the market got absolutely slammed. So that's GameStop. Speaking of Michael Saylor and MicroStrategy, this one is very, very interesting. Look at these highs to lows and hit the like, subscribe if you haven't already. We've been following this for months. This is MicroStrategy in the prior cycle, and just watching the pattern and the trend to see if we're getting something similar this cycle. This is for the Bitcoin cryptocurrency cycle. This is on a weekly chart, tops to the bottom. 14 weeks, 90-ish, 98 days. If I chuck it onto the daily here, just to get just tiny little bit closer to the action, the days were 69 trading days, 99 calendar days, because of course it doesn't trade on weekends or public holidays. Top to the current low, well, the higher low. Let's take it here. Top to bottom, 99 days again. Now, not exactly, because here is the actual low by a few cents more, but I'm looking at both of these because it was a double bottom at that point. 110 days, 72 trading days. Nonetheless, the downtrend was basically halted at the exact same time frame as last cycle. And then you look at last cycle again, you had a double bottom, and then the market took off to the upside, putting in basically a double top April to November. So we're looking at the time frame now from the low to the top, and that was 174 days. So just a week or so short of 6 months. Could this be the case again? Well, let's wait and see. Of course, it's always a wait and see game. At the moment, it blows my mind. It did exactly the same time frame to halt the downtrend. It put in a double bottom, which in this case was 11 days difference for the lows, whereas the prior cycle was about 20 odd days difference. Have a measure, you can see it for yourself, low to low. There you go, 20 days, and then basically did its work from that point. This cycle, however, dropped 57% from the high. Last cycle, it dropped 69% from the high. And this time, it's had a relatively okay run, but it really does need to hold $323. So that's the close enough 50% level from the low. It's not the major 50%, which it is above, so above 278. That's a good sign, but the volume again is dropping off here. So even if this sort of lags again, as long as it puts in the higher lows, it's going to pretty much, for the time being, repeat that pattern. And 170 odd days takes you out to August of 2025. So I'll be looking forward to somewhere around, call it Q3, and of course Q4 of 2025. It's a big gap, but late Q3, early Q4, to see whether this same sort of pattern repeats and we get a top in the Bitcoin market at that time. Over to BTC and cryptocurrencies. Now, the forward returns here for Bitcoin over the quarterly, generally this quarter, just a bit better than 50-50. And I've blocked these out so that we can get a clear reading of the next quarters. Quarter 2, April to June, April, May, June, is generally around a 71% hit rate for BTC. Now, like we've seen in the past, last year was not a great quarter 2. It was down 12%. But Bitcoin did have 2 strong quarters to the upside. And like I've shown before with BTC, it generally does a couple of red quarters for each of the cycles. You can see we've got 1, 2 red quarters so far, with only 4 days left for this quarter. A close above 93,350 is going to give us the green quarter. But even if this ends up being a red quarter, I don't think it's the end of the world, because we've seen multiple red quarters in previous bull markets. And the longer it's able to remain here but not break down, well, then there's a stronger case for any breakout above this level. 2021 cycle, you had one major one there. That was in quarter 2. And you had 1, 2, 3 there as well back in 2019 and the first quarter of 2020, obviously the pandemic, and then the market shot up from that point. And so that leads to the conversation around money printing now. When is that going to come back? And yesterday I looked at global liquidity and different charts with the global liquidity and also the M2 global liquidity. My view is that a lot of those have been curve fit. Curve fit can also mean looking at particular time frames. And if you take it back far enough, well, then the correlation is going to lose its effect there as well. And I prefer to come back to just the swing charts, the 50% levels, and stuff that has been studied for over 100 years, as opposed to the money supply. It can be helpful, but I wouldn't be weighing all of my hope on that particular chart, which in many cases, no matter which global supply it's looking at, has been curve fit to the market. So in terms of the daily action here, overhead resistance at 89,000. The key levels to break and hold above, still 93,000 and 95,000 being the 50% and the swing top. Anything below it and rejected, that means we'll probably come back down and test some of these previous lows in the low 80s. But still, for now, the market's holding up relatively okay. And I think it could just be loading up here for the short-term move higher. So the most difficult part about the market right now, in the case of BTC, is that we still don't see any strength through the S&P 500 that's going to take it back to new all-time highs. Basically, not much clarity there. However, a big one is like we saw with the consumer confidence. Every time, barring 2021, so pretty good rates there, that we see the consumer confidence drop this bad, and of course on the reading here is above 25, it's been around a very significant low in the market. Because it's a longer term time frame, that means it's going to take time for the low to play out, which is why I've still got my sights set towards quarter 2 to give us more clarity on this low. Overall, my position hasn't changed. I still think we're in the markets have shown that we're still in a macro bull market because we haven't had any breakdown of key support levels. So the longer term time frame support levels, obviously in the case of the NASDAQ, you've got the levels back down at the all-time high. Same sort of thing for the S&P 500 and also the August lows here around 17,000 points. The same thing can be said for BTC. The market's still holding above 79, put in the low at 76, closed above those, and it hasn't broken down from the key bull market range that is around $62,000. With the uncertainty in the air, it gives us a little more time to prepare for that next stage. Of course, invalidation levels to the downside. If we're still holding out here, then I think we're going to be set in a pretty good position moving forward later into 2025 with all the cycles, the Kondratiev, the commodity cycle, the 18.6 year cycle, and the stock market's also looking like they're setting up for bigger moves later in the year. Don't forget the TIA Premium sale is on right now. Check it out, link in the top of the video description. Like, subscribe, and I'll see you guys back here at the next video. Thanks again. Take care. Peace out.